Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour chart with the bearish scenario where we are looking for a zigzag to the upside in wave A, B and a wave C. Inside wave B here, we are counting a triangle, and that is an important detail because that means the common target area for your wave C is lower than usual. Usually your wave C common target area is the 1 to the 1.236, but the moment a wave B is a triangle, it becomes the 0.618 to the 1 to 1, which gives you an area between 45.1k and 48.1k. In this area, we are currently at resistance. The blue box here between 45.9k and 46.7k, and just above this box we have the range value area high at 47k. If price can flip the range value area high over here, then we can be looking for the highs at 49k. In the more bullish scenario, we are looking for a wave A, B, C or an impulse in a wave 1, 2 and a wave 3 towards the upside. However, because this range over here was such a shallow retracement of wave A/1, only retracing to the 0.236 to the 0.382 Fibonacci taken from the low to the high of A or 1, probabilities are higher. This structure here is a wave B and this move to the upside is a wave C. Now in this particular scenario, we are not looking for a triangle in a wave B/2. Also in a wave 2, a triangle is not even allowed. Here we are looking for a wave W, X and then eventually a wave Y. That means that now the common target area for your wave C is higher. Taken from the low to the high of A to the low over here, your common target area is between the 1 to the 1.236 and also the 1.618 is still a relatively common target for a wave C and usually a minimum target for a wave 3. That means your target area now is between 47.2k and 48.9k, and that means you're going to get very close to the 49k high here because the target area for your wave C starts above the range value area high, and it is very uncommon for a wave C to not hit the common target area. So hitting the 1 to 1 would be a minimum requirement for this wave C, even though the 0.618 is the absolute minimum target, but that is very, very rare in a scenario where wave B is not a triangle, right? We're not looking for a triangle B. But here the 1 to 1 would be a minimum requirement, but as you can see it's above the range value area high, and if we can flip it as mentioned, we can be looking for price to take the highs at 49k. And that then leads to very interesting scenarios, because if price does take this high over here, the bearish scenario becomes a flat structure here, where then we are looking for a 3-wave move to the downside in a wave A, we're looking for a 3-wave structure to the upside in a wave B, and then we're going to be looking for a wave C towards the downside. Your common target area for a wave B in a flat is between the 1.236 and the 1.38 Fibonacci taken from the high to the low of wave A, which is between 51.6k and 53.1k. The 0.9 is a minimum requirement for a flat in a 335 wave structure. The 105 is less common for an expanding flat, and the 1.618 is also less common for an expanding flat. And an expanding flat is the most common flat structure. So the moment that price takes this high, the bearish scenario becomes a flat structure here, where then we're looking for a wave C to the downside, while the bullish scenario is of course impulsive continuation, but it does have lower probabilities because of how shallow this range was over here. If we then zoom out to the weekly time frame and see what these scenarios mean on the higher time frames, right, then on the higher time frame we can be looking here for a double 1-2. Now because this wave 2 here was a flat structure, in a running flat in this case, ABC bouncing on the 382, there are increased probabilities that wave 2 here is also a zigzag structure, as in a double 1-2, the wave 2s do like to mimic one another. Now in this scenario, the common target area for your second wave 2 here is between the 0.5 and the 0.786 pulled from the low to the high of the second wave 1. The 0.382 is a less common target for a wave 2. We already hit it over here and preferably we don't do it again. Of course, we are bouncing on the 382 here at the moment, but preferably we are still looking for more downside in this wave 2, either in a flat structure or then potentially a zigzag or other scenario where we at least hit the 0.5 at 37k before then continuation to the upside in this scenario. And also, this wave 2 preferably ends after the 0.382 fib time, taken from the low to the high over here. It is very uncommon for a wave 2 to end before the 0.382 fib time, which is sitting on the 19th of February 2024. The second bullish scenario is an impulse to the upside, 1, 2, 3, 4, 5. Most common target for a wave 4 here between the 382 and the 05 Fibonacci, taken from the low to the high of this wave 3, giving you a target area between 39.8 and 37k, with the invalidation being the 0.618 at 34.1k. A wave 4 can be any corrective structure, and you already hit the 0.382. So even if price would now form a WXY and then move up, or a triangle over here, not hitting this area once again, right, for a second time, that is no problem in this particular scenario, right? Now, I've shown you the flat earlier. If price takes the high and we do get a flat, it's also a common target for a 4, so it's definitely something to keep in mind. After 4, we are then looking for an impulsive structure to the upside in a wave 5, 1, 2, 3, 4, 5. Common target area for wave 5 is the 1.236 to the 1.618, taken from the high to the potential low here at around the 05, and that is then the end of your first wave 1, and then we're looking for a wave 2. Which does lower the probabilities a bit for this scenario is time, because this scenario here takes so much time to form. It's such a long structure for a wave 1, especially when we compare it with previous wave 1s. The bearish scenario on the weekly time frame is the ABC here, wave A, B, C. The 0.382 is a common target for wave B, but what we want to see locally is strong signs of weakness, and at the moment we don't yet see that, right? We want to see at least a wave 1, then a 2, and then a bigger 3 to the downside, big bearish CVD divergences, that sort of stuff, right? At the moment we don't yet see it, but we continue to observe. This is your common target area for your wave C between the 1 and the 1.618 over here, 40k, 50k, right? And time wise, your most common target for C is between the 0.618 and the 1.618 fib time, taken from the low to the high of A to the low of wave B, comparing A in time with wave C in time. I also want to show you this channel here. Yesterday during the live stream, I was talking to Archie about several channels, and then we found this one here, taken from the low to the low at 24k to the first time hitting 30k. And as you can see, this channel is very nicely respected. It's definitely one that I like to keep an eye on, and from an Elliott Wave point of view, channels are actually very important. And if we look for a zigzag to the upside in a wave A, B, and then a wave C, the upper trend line of the channel is a target for a wave C. And if we're looking for an impulse to the upside, a wave 1, 2, and then a wave 3, then what you want to see is price breaking out of the channel and then later in a bigger wave 4 coming back to the channel. Now this is a channel on the logarithmic chart. That's important, because if I switch it to the linear chart, you can see it looks completely different, and I even have to move it to the upside a little bit. So the pool over here is the same from the low to the high, but now price already broke above the channel, potential retest, and of course continuation. Now we know what we are looking for locally from an Elliott Wave point of view, but at least it's an interesting channel that I like to show during this video. If we look at the volume profiles over here, right, then we have over here a bounce on the point of control. We entered the range, moved towards the value area high, back to the point of control. It's typical range trading stuff, and I do think that this range is going to be very important during 2024, where also, just like on the lower time frame, we can expect some deviations, meaning price moving to the upside and back in the range, price moving to the downside and come back in the range. Definitely also some volume profiles that I would keep an eye on. Now above price, we also have a monthly gap which has been touched for the second time. Over here on the monthly chart, we have a first candle, which was the all-time high. Then we have a second candle to the downside, and then we have the third candle. And this candle here to the downside has a gap. Now this gap was touched once, big rejection to the downside, came back another time for a second touch. It does slowly increase the probabilities to fill the gap, but preferably you want to see it hit at least 3 times. 48k therefore is an important level, because if we hit this again, probabilities definitely increase to fill the gap to the upside to 53.3k. If we look at the CVD divergences, then before taking off we had bullish CVD divergences, which was very nice, price moving to the upside, but at the moment, as long as price is not at least putting in a decent range, it doesn't really make sense to look at the CVD divergences for now. We are looking for a wave C to the upside, which by itself is an impulsive structure, so preferably we're looking for a wave 4 ranging structure, which is at least the size of the range that you have over here, which so far we did not have. So therefore we would still be looking for a wave 4, and you can then pull a fib from the low to wherever the high eventually is going to be for a wave 3. Toggle on your wave 4 targets, and then your common target area for a wave 4 is the 236 to the 05. So you can see that even if price is going to dip for quite a nice bit, you're still in a bullish trend as well for a potential 5-wave structure to the upside. But from a CVD perspective, you really want the range to start. The weekend is coming up, of course, which usually is a ranging structure. So let's wait and see what the weekend gives. But before it's weekend, we still have today, and it might be another day full of interesting price action. If we then look at the probabilities of the different scenarios, then on the high time frame, right, the weekly chart probabilities are neutral. We are just observing the local structures here. On the low time frame, which is this structure that we have, we are looking for the start of a wave 4 or the end of a wave C. As mentioned, we are just waiting for a range to form. As long as price is not putting in at least a decent range with a bit of a rejection, right, we are simply looking for price to move higher, right? So we want to see a clear rejection, clear weakness, and preferably a clear sideways range, bit to the downside, possibly during the weekend, and then we'll take it from there, right? Wave 4 common targets, as explained, are the 0.236 to the 0.5 that you take from the low here to wherever the high is going to be, with the 0.618 being the invalidation for a wave 4. And as long as we don't get a longer range, upside is expected. Now we are hitting resistance at the moment, right, as I write over here, so I keep my eyes open for potential weakness and a potential range in this area. But the weekend is coming up, which commonly leads to a ranging structure. However, it's not yet weekend, it's Friday, the markets are open, so we might still have some very interesting price action today. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.